In the equity quadrant, the March Nasdaq led all day after a strong start, forming an outside range day. The high today was 25,465.25, up 1.06% and higher than yesterday's high, while the low was 25,058.25, down 0.56% from yesterday's settlement and lower than yesterday's low, forming that outside range day. Now, outside range days can be a reversal pattern if we get a lower close and it's preceded by a rally. And right now, with a little bit of time left before the future session is over, the March Nasdaq futures are still up 0.51%, but today's high did come against prior resistance, and it was after a rally that we had the outside range day, so it may end up being a reversal signal anyway. Now, Nasdaq heavy sectors were largely in the middle of the pack today, neither leaders nor laggards. For example, near the end of the day, the best performers were energy, utilities, and consumer staple sectors. The worst performers were financials and the communication sector, which is represented strongly in the Nasdaq. But the information technology sector, which is the biggest one in the Nasdaq, was right in the middle of the pack at plus 0.71 as I speak to you right now. Consumer discretionary, also heavily represented in the Nasdaq, was down 0.51%. So the Nasdaq was right in the middle of the pack in terms of sector performance, despite being the strongest index of the four major U.S. indices for most of the day. Now, the early drop we saw in Treasury yields early this morning, which was a continuation of yesterday's drop in yields, was reversed by the strong non-farm payrolls number. Outside of the annual revision, every part of non-farm payrolls were either matched or beat the expectations. But the most important part to me was the unemployment rate fell while the labor force participation rate increased, meaning that more people are working, not fewer looking. That's a good indicator that the labor market is stronger than market participants thought prior to this number. Now, based on that, markets are pushing rate cuts further out into the 2026 calendar, which is slightly a headwind for the Nasdaq future.